Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with Asian shares. They turned mixed on Tuesday as investors wait a raft of corporate report cards in the region and of course awaited the release of the federal budget in Sydney. Australia's S&P 200 index edged slightly higher ahead of the nation's annual federal budget due later in the day, which markets expect to show a deficit of over 40 billion Australian dollars. That's approximately 31.5 billion US dollars. Japan's Nikkei 225 index touched a 7-day low on a broad-based slump. Against the yen, the dollar added about 0.1% to 120.17 yen, well above its overnight low of 119.40 and slightly within its range held since mid-March. The New Zealand dollar marked a fresh 7.5-week low of 0.7328 earlier and of course stood at 0.7350, up about 0.3% on the day after plunging in the previous session after ANZ Bank predicted that the Reserve Bank of New Zealand would cut rates in both June and July. The dollar firmed against major counterparts on Tuesday as ongoing anxiety over Greece's debt crisis helped push the euro toward a 1-week low. Two Greek finance ministry officials said that Athens paid about 750 million euros to the International Monetary Fund a day before it was due. But this was not enough to alleviate anxieties that the country will be able to make future payments. As the Eurozone finance ministers met in Brussels to discuss a cash for reforms deal with Athens, Greek Finance Minister Yanis Varoufakis said on Monday that a referendum on Greece's bailout is not planned for the time being, and of course that capital controls have not been considered for the country. Traders see the chances of Greece leaving the Eurozone at slightly less than 1 in 4. The euro was down slightly on the day at 1.1154 after coming within a few ticks on Monday's through of 1.1131 and well away from a 2-month high of 1.1392 touched last week. The British pound edged down about 0.1% on the day to 1.5568, taking a breather after scaling its loftiest peak of the year against the greenback on Monday, rising as high as 1.5614 in the wake of Prime Minister David Cameron's British election victory. In the commodity sector, we're looking at gold struggled below the 1,200 an ounce on Tuesday following small overnight losses, hurt by a firmer dollar, and of course the absence of any robust safe haven bids stemming for the Greek debt crisis. Gold will probably extend its losses under 1,200 as strength in the dollar underpinned the bearish sentiment in gold. Bullion also failed to get a big liftoff from last week's U.S. job data, which tempered views a U.S. rate rise could come at the Federal Reserve's next policy meeting in June. We also believe that gold's price action is bearish and the metal will fall back towards the May 1st low of 1.170. Oil prices eased on Tuesday as the market remained oversupplied and the dollar gained on fears that Greece would not be able to repay its debts. We expect prices to keep falling further on Tuesday, especially if the Organization of the Petroleum Exporting Countries monthly report due to be released later today showed a rise in production. And for the most important news today in the calendar, UK's industrial and manufacturing production coming at 8:30. And of course at 9:30, Australian budget release. Also at 14, UK's GDP estimate. It will be released by the National Institute of Economic and Social Research. That's all for today. Thanks a lot for being with us. Stay tuned and of course keep an eye on the calendar. Important events due today. Bye-bye.